Thank you, Mr. Chair. Thanks, Mr. Chopra, for being here. So I want to talk about a couple of issues, one of which is the Department of Justice and CFPB's joint statement effectively discouraging banks from asking about immigration status in loans. And here's what worries me about this. So first of all, of course, we have a historic human and drug trafficking crisis on the southern border. I worry about the Biden administration effectively signaling to banks that they should make it easier to lend to folks who have come into the country illegally, and I worry that could frankly exacerbate the crisis that we already have. The second point that I make on this is just if I look at this from the perspective of a bank, it seems totally plausible and reasonable to me that if you're lending to an illegal alien, that is maybe a riskier loan than lending to a legal alien or a citizen of the country. So just to sort of strongly discourage you guys from going down that route. And I think we should try to make it easier maybe for the financial system to discourage the immigration crisis that we have before us. I actually wanted to ask about a separate question. I know, Mr. Chopra, you share some of the concerns that I have about the concentration in the financial system. And, I still don't think the American people have gotten a full accounting and understanding of what happened with the Silicon Valley and First Republic bank collapses. And I want to kind of lean in there and maybe just start with the very basic question of when First Republic was acquired, we've heard a number of different arguments or a number of different claims publicly and privately about what the spread was between the PNC offer and the JPM offer, which eventually was, of course, the successful offer to buy First Republic. Are you willing to tell me on the record what was the spread between the JPM offer and the PNC offer?
There were multiple bidders.
Of course.
I don't know if I'm permitted under law to say the specifics, but let me just say this, which is that JP Morgan Chase's purchase would have ordinarily been completely prohibited by law.
Yep.
That was not a decision of the FDIC. The FDIC had to look at what the least cost was. And there was a determination that JP Morgan's bid was higher. And then that went through bank merger review by the other agencies. But we'll try our best to give you more information on the multiple bids.
Yeah, I'd appreciate that because, one claim that I've heard is $20 billion, right? A spread of $20 billion is significant. And obviously we want to minimize the risk to taxpayers and to the depository insurance program. I've also heard the claim of $1 billion. And if the difference between the bids was $1 billion, that seems like a small price to pay relative to the massive concentration problem raised by First Republic going to the largest bank as opposed to a significantly large but still fundamentally regional bank. Let me sort of ask this question, Mr. Chopra. Let's say, understanding you can't give me an answer right now, and I would appreciate you following up. If the spread was $1 billion, do you think that raises some pretty significant concerns about how that bid and purchase process unfolded?
Well, yes, although the statute as written does require the FDIC board to accept the least cost. But of course, the Federal Reserve Board, the other regulators, they have the ability to disqualify under the Bank Merger Act.
Right.
So I think that's really the two pieces. And we'd be happy to share with you how the statute could be tweaked to avoid this.
And I appreciate that. And just the last question here. So you mentioned this earlier, but FDIC Chair Grunberg waived the requirement that would effectively cap any purchaser from putting the financial system at a situation where a single entity contained more than 10% of national deposits.
No, the FDIC cannot waive that. That's the other regulators.
That's the other regulator. Okay. Thank you. Could you? Well, let me put it this way. Did you have any concerns with waiving that requirement? Recognizing that wasn't your decision, do you have concerns with waiving that requirement?
Well, certainly, I think you've talked about the trade-offs between the cost to the deposit insurance fund and how the increases in concentration should be weighed.
Yeah.
I personally have great worries that the largest institutions, if they're able to scoop up all the failed institutions, even when there's other bidders, it raises some real issues.
Great. Thanks, Mr. Chopra. Thank you, Mr. Chairman.
Vance, Senator Menendez of New Jersey is recognized.
Good to see you, Mr. Chopra. While some banks have either decreased or eliminated overdraft fees,